Hello everyone, and welcome back to your weekly dose of what's happening in the wild world of cryptocurrency. Whether you're a longtime enthusiast or just starting to dip your toes into digital assets, you're in the right place to get up to speed on all the latest developments. It's Tuesday, September 16th, 2025, and the market has been on an absolute tear. Prices are surging, and the excitement is palpable across the industry. We're seeing new highs, fresh optimism, and a sense that something big is brewing. The energy is electric, more mature, more institutional, and more sustainable than ever before. Big players are entering the space, and the strategies are getting more sophisticated. It's not just about hype anymore, it's about real growth and innovation. We'll break down everything you need to know, from Bitcoin and Ethereum to regulatory news, and the explosive growth of Web3 gaming. There's a lot happening, and we're here to make sense of it all, so you don't miss a beat. This week, we're diving deep into the numbers and the narratives driving them. We'll look at what's fueling the momentum and what it could mean for your portfolio in the weeks ahead. Massive inflows into ETFs and major tech upgrades are making blockchains faster and cheaper. These changes are opening the doors for more users and investors and could reshape the entire landscape of digital finance. We'll explore whether this is a temporary surge or the start of the full-blown bull run analysts have predicted. Is this the beginning of a new era, or just another spike before a correction? We'll break down the signals and what the experts are saying. Whether you're a seasoned veteran or a newcomer, this breakdown will cut through the noise and give you a no-nonsense look at what's moving the markets. We'll help you separate the facts from the hype so you can make smarter decisions in this fast-paced environment. Let's start by looking at the performance of the two titans of the crypto world, Bitcoin and Ethereum. We'll analyze their recent moves, what's driving their momentum, and what to watch for in the days ahead. So, buckle up and let's dive right in. Let's get right to the main event, the price action. The crypto market is buzzing with excitement, and all eyes are on the charts as momentum builds. It's not just another ordinary day, we're witnessing a pivotal moment that could define the next phase of this cycle. The market is a sea of green, led by Bitcoin and Ethereum. Altcoins are following suit, with many posting double-digit gains as investor confidence surges. The energy is palpable, and optimism is spreading fast across trading floors and online communities alike. Bitcoin is confidently trading above key levels, with whales accumulating and on-chain data signaling more upside. Large transactions are being recorded on the blockchain, suggesting that major players are positioning themselves for further gains. The technicals are aligning with the fundamentals, creating a powerful setup. This isn't just retail FOMO, institutions are making calculated moves. Hedge funds, asset managers, and even pension funds are entering the space, bringing a new level of credibility and stability to the rally. Their involvement is changing the game and attracting even more capital. Ethereum is also surging, fueled by spot ETF approvals and ongoing upgrades that reduce fees and boost scalability. Developers are rolling out new features, and the network is handling more transactions than ever before. This combination of innovation and institutional interest is driving prices higher. The current market structure is textbook bullish, higher highs, higher lows, and massive institutional inflows. Technical analysts are pointing to strong support zones and breakout patterns, while on-chain metrics confirm the strength of this uptrend. Unlike past cycles, this run is driven by mainstream capital, not just retail speculation. The narrative has shifted, with traditional finance embracing crypto as a legitimate asset class. This broad participation is making the rally more resilient and sustainable. The Bitcoin halving in April 2024 cut supply, and combined with ETF demand, set the stage for this rally. With fewer new coins entering circulation and more buyers than ever, the supply-demand dynamics are fueling upward momentum. After a healthy consolidation, the market looks ready for the next leg up. Traders are watching for breakout signals, and sentiment remains overwhelmingly bullish as we approach key resistance levels. All signs point to a sustained and powerful bull run through the rest of 2025. If current trends continue, we could be witnessing one of the most significant rallies in crypto history, with opportunities for both seasoned investors and newcomers alike. The launch of spot Bitcoin and Ethereum ETFs has marked a historic turning point for the financial world. For years, traditional finance kept crypto at arm's length, but now, Wall Street is embracing digital assets like never before. The arrival of these ETFs has not only captured the attention of seasoned investors, but also brought a new wave of interest from institutions and everyday traders alike. This pivotal moment has defined the current crypto cycle, setting the stage for unprecedented growth and mainstream adoption. The excitement is palpable, as market participants recognize the significance of this shift. The SEC's approval of spot Bitcoin ETFs in January 2024 opened the floodgates, with daily trading volumes hitting nearly $10 billion. This regulatory green light was a long-awaited milestone, signaling that crypto is no longer on the fringes, but is now a legitimate part of the global financial system. These ETFs now hold over 1.2 million BTC, locking away a massive chunk of supply. This unprecedented accumulation has made Bitcoin scarcer than ever, amplifying its appeal as a store of value. This programmatic buying pressure acts as both a price floor and an accelerant, fundamentally changing Bitcoin's supply-demand dynamics. As more capital flows in, the upward momentum becomes self-reinforcing, drawing even more attention from investors worldwide. Ethereum's spot ETFs, approved in May, have also seen steady growth, with holdings surpassing 3 million ETH. This signals growing confidence in Ethereum's long-term potential, not just as a cryptocurrency, but as the backbone of decentralized finance and Web3 innovation. Institutional validation has solidified Ethereum's status as a premier asset and introduced new investors to DeFi and Web3. Major funds and asset managers are now exploring opportunities in the Ethereum ecosystem, further legitimizing its role in the future of finance. The ETF approvals have encouraged Fortune 500 companies to quietly add crypto to their balance sheets. This trend is accelerating, as corporations seek exposure to digital assets as a hedge and a growth opportunity. What started with MicroStrategy's bold move into Bitcoin is now going mainstream, with more companies following suit and integrating crypto into their financial strategies. ETFs gave Wall Street's seal of approval, and now the corporate world is following suit. The lines between traditional finance and crypto are blurring, creating new opportunities and challenges for everyone involved. This is a paradigm shift for the entire industry, ushering in a new era where digital assets and traditional finance are finally converging on a global scale. Regulatory uncertainty is finally clearing as governments implement comprehensive frameworks. In the US, the Crypto Regulation Act of 2024 provides clear rules for digital assets, boosting investor protection and industry health. The EU's MiCA regulation creates a unified licensing regime and enforces strict stablecoin rules, leading to a more secure ecosystem. Asia, especially Hong Kong and Singapore, is emerging as a crypto hub with progressive regulations. The UAE has clarified crypto tax treatment, removing key uncertainties. This global race to become a crypto hub is incredibly bullish for the industry. Regulatory clarity means more compliance, but it's essential for mainstream adoption and institutional investment. These new laws are building the guardrails for the next $1 trillion to flow into crypto. Beyond price and regulation, real value is being built by developers upgrading blockchain technology. Bitcoin's renaissance includes Layer 2 solutions like Lightning Network, and new protocols like Ordinals, unlocking NFTs and tokens on its chain. Ethereum's proto-dank sharding upgrade slashed Layer 2 fees, and the upcoming Pectra upgrade will make wallets more user-friendly. Layer 2 networks like Arbitrum and ZK Sync are exploding in activity, solving Ethereum's scalability without sacrificing security. Most user activity now happens on these L2S, creating a modular, mainstream-ready ecosystem. Other blockchains like Solana are pushing speed, while new projects experiment with privacy and interoperability. This relentless innovation keeps crypto relevant and growing. The current rally is built on years of hard work by thousands of developers. Technology is the foundation for everything happening in the market today. While Bitcoin and Ethereum lead, altcoins are waking up as capital rotates into more speculative plays. DeFi, AI, and blockchain gaming sectors are seeing renewed interest and explosive growth. DeFi protocols are regaining users and value locked, while AI tokens ride the broader tech narrative. Blockchain gaming is onboarding millions, with game-related tokens posting huge gains. The NFT market has shifted from speculation to real-world utility. Projects now offer tangible benefits like exclusive content and in-game functionality. Tokenization of real-world assets and new standards like ERC 404 are driving innovation. Major gaming companies are integrating NFTs, bringing them to mainstream audiences. The altcoin and NFT space is evolving fast, with real utility leading the way. As crypto's value rises, so does attention from hackers and regulators. In 2024, hacks and exploits surged, with over $2 billion stolen, much by state-sponsored groups like North Korea's Lazarus. Security remains a top challenge, and users must stay vigilant. On the legal front, major cases closed. Sam Bankman-Fried got 25 years, CZ of Binance served time and paid billions, and Do Kwon faces trial in the US. These enforcement actions, though damaging short-term, are crucial for industry maturity. They send a clear message: fraud and illegal activity won't be tolerated. Even tech platforms like Telegram are under growing scrutiny as regulators crack down on crypto-related crime. The macroeconomic backdrop is fueling crypto's rise. The US Federal Reserve cut rates 3 times in late 2024, injecting liquidity and making risk assets like crypto more attractive. A weaker dollar means it takes more dollars to buy Bitcoin, naturally pushing prices up. Crypto's narrative as a hedge against inflation and currency debasement is gaining traction, especially in emerging markets. In countries with weak local currencies, people are turning to Bitcoin and stablecoins to preserve wealth. Crypto acts as both a risk-on tech investment and a safe haven asset, thriving in today's environment. The combination of monetary easing and global economic challenges is creating a perfect storm for crypto appreciation. Telegram has become a dominant hub for Web3 gaming, onboarding millions into crypto through simple, viral games. In 2024, over a fifth of new Web3 games launched on Telegram, leveraging its massive user base. Games like Hamster Combat and Catizen have exploded, with hundreds of millions of users tapping and playing for future token rewards. These games use simple mechanics and social features to drive viral growth and engagement. Players learn about airdrops, wallets, and tokens without even realizing it, a Trojan horse for mass adoption. As these games launch real tokens and integrate DeFi and NFTs, they could become powerful economies. Telegram's gaming boom is one of the most important trends in crypto right now. It's changing how the next billion users will enter the Web3 world.